Could stocks actually be undervalued, even at record highs? It's a great question. Welcome to Trading Nation. I'm Brian Sullivan. Matt Maley with Miller Tabak, Nick Kolas with Convergex. Nick, I'll begin with you. Is there an argument to be made that on some metrics that we are not expensive at all?
Yeah, look, on baseline numbers, consensus earnings estimates, the market feels basically fully valued. We're at 19 times this year and 17 times next year's earnings by any expectations. Pretty fair valuation. To understand the upside case, you've got to not look at the average estimate, but at the high estimate. Who's the analyst that has the highest number for, say, all the companies in the Dow? And if you look at all the high estimates, then you get to a multiple of more like 15 times next year's earnings and roughly 16% earnings growth. That's the kind of recipe that makes for still an undervalued market, but you really have to get your head around the fact that you've got to be believing in the maximum upside case to have stocks feel cheap here rather than the consensus case where they basically just look about fair valued.
Matt Maley, what do you think? Argument, we had you on talking about why we may be overvalued in technology. Could you flip it, because you're a good trader, and make the case for an undervalued market on some respects?
To be perfectly honest, it's a little tough to do that. I see what Nick is saying, but we do have a couple of things that are working against us here, because what Nick is saying, you have to get the best case scenario. And with interest rates moving higher, that's going to be tough to achieve, because companies aren't going to buy back as much stock because it'll be more expensive to do so. So financial engineering won't work as well. But we also have concerns about whether Donald Trump will be able to get past everything he wants to get past, and to the degree that the market is pricing in that he'll get past. I just think especially on the GOP side, we have more factions in that area than the Democrats have. And Trump, although he'll be able to ram through any objections on Obamacare, I think he's going to have a much tougher time on the budget side, on the tax cut side, and border tax and other issues, which is going to have to be revenue neutral, at least more revenue neutral than he's probably going to be able to get. So I think earnings going to have a tough time really gaining the way people think they are. So it's going to be tough for valuations to come down. The last thing I would say is that when the market gets this, when valuations get as stretched as they are now, we never grow into those valuations. Prices have to come down a little bit to get somewhere and get a more reasonable value of PE ratios, et cetera. So I think it's going to be a little bit tough to do that.
I think it might have been a little tougher for the argument of the undervalued than the overvalued, but you got to take both sides of the market. Matt Maley and Nick Kolas of Convergex. Guys, thank you both very much. We appreciate it. Folks, thank you for tuning into Trading Nation. As always, I'm Brian Sullivan, and we'll see you soon.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.